But on that note, let's get in. Amit Jeswani of Stallion Asset Management. He joins us right now on the show to talk about his thoughts on what's happening in the markets currently. Amit, good having you as always. Thanks much for joining in. You know, there's a picture, Amit, that came in this morning on the WhatsApp Wonder Box, which spoke about how, on hindsight, if you had bet on X side of financials versus Y, you would have been laughing your way to the bank as opposed to crying if you were holding a Yes Bank, an IndusInd, or some of the others. Difficult to make those calls when the moves happen. The question is, if you are starting to choose financials right now, where would you be placing your money?
So you see a large smile on my face. Probably I might be holding some of those stocks. See, in financials, it's a leveraged bet. And when you're leveraged 8, 9x, you have to bet on the promoter all the time. Like 80% of your bet, no one knows what's there inside the books. So you need to bet on promoters. I'll just give you what are the kind of things that we are seeing. Our total credit market, Neeraj, is about 100 lakh crores. In the next 5 years, this credit market will broadly double to 200 lakh crores. Today, your private banks, let's say HDFC is to 8 lakh crores, IndusInd is 2 lakh crores, Kotak is 2.5 lakh crores, ICICI is 6 lakh crores, and Axis is about 5 lakh crores. Broadly, the whole basket today is about 21 lakh crores out of the 100 lakh crores today. In the next 5 years, this 100 lakh crores will become 200 lakh crores. Which are the guys who can actually get that market share? So the opportunity in Indian credit is huge. And the most easy way to play financials or consumer is to buy the stocks which are hitting new highs, because the markets are a lot smarter than what people think. So follow price action in financials, you'll be better off. Like Yes Bank, and it's been a very tough ride, but I see everyone buying these shares and I'm more and more surprised. Like if you were buying them when they were making new highs, it was a different thing. But buying them because they have fallen. See, when a stock falls, let's say a Maruti has fallen because there is an economic slowdown and it's not a company, it's not an ethical problem. That is good value investing. That means you're buying a good company in bad times. But when there are corporate governance problems and you're buying a dip, that is not value investing. Warren Buffett today doesn't buy. Warren Buffett's portfolio, so because everyone quotes so much of Warren Buffett has 25% of his entire portfolio in Apple today and 22% in consumer stocks like Gillette, Coca-Cola, and financials. He has the best quality financials like Wells Fargo and all those kind of companies. So you have to buy quality when they come down, not companies with wrong corporate governance.
Okay, no, that's a fair point, and that's a very nice distinction too, Amit. I'll want to follow up on a set of stocks that are somewhere wedged in between there. There is an IndusInd Bank which is starting to come under a bit of question in terms of lack of complete clarity. That's what a couple of brokerages said. Edelweiss, IIFL, two names which were doing very well. A lot of people liked it. You liked Edelweiss too. They too have come off. What do you do with these names? I'm not even going down to Yes, which has got idiosyncratic issues, or ADAG or some of the others. What about the names that I mentioned?
So IndusInd Bank, it was the only bank which didn't write off ILFS exposure at one shot, okay? Because they were trying to do some kind of evergreening kind of things that the markets didn't like it. So IndusInd, what happened is, I'll tell you, Neeraj. IndusInd has exposure to ADAG. IndusInd has exposure to ILFS. IndusInd has exposure to DHFL, the IndusInd. So basically, all four IndusInd has exposure to SL Group as well. So people were taking, because IndusInd used to trade at 5 times book. So people were putting IndusInd in the same category as Kotak and HDFC Bank. After this crisis, what has happened? That category has changed for IndusInd, that you're good, but you're not as good as HDFC or a Kotak in lending. So that is why you see the valuation derating. Sopti will change next year, so that's going to be an important change. We need to see who's the new CEO, because in banking you bet on the promoters, on the management. The second question, so IndusInd, we need to see how they can get out of this, but they have the best ROEs. HDFC will do an ROE of 16 to 18%. IndusInd's ROE will be somewhere around 22, 23%. So if they can sort this out, it will probably be the fastest growing like the fastest ROE, like highest ROE bank. The second question is about Edelweiss. This is someplace we have positions. Neeraj, year two, my bet is on the management. Okay, see, normally stocks remain expensive till the time you don't see a major bad news. Edelweiss was not cheap. We got in like 2 years back, but we're still very bullish on Edelweiss. Edelweiss, I think they have done very smart things of selling stake to your Canada pension fund. I think that's a very smart investment. See, they don't have a big daddy behind. Piramal has a big daddy behind. Your L&T has big daddy behind. For your Bajaj has a big daddy behind. For an NBFC, you need others to trust you. And with Canada in the game, I believe they will trust. But see, even in the worst quarter, last quarter was supposed to be the worst quarter. If you see, Edelweiss earnings were 240 crores. So if you like, even the worst quarter with all negative news, all negative spreads, it gives me comfort that going forward, things will look okay. But the next leap of growth for Edelweiss will come from the AIF side. It will not come from the NBFC side. If you see, they have come out with a 2022 guidance, and that implies a very high earnings growth. I don't think like we should not rely on that part. But broadly, Edelweiss will do well over long term. But short term, it will not. It will continue to struggle with other NBFCs. It trades at 2 times price to book. The 4 times price to book is history for NBFCs. That will not gonna come back. Now the new range I think is around 2 times book. And then let's see what ROEs Edelweiss can do. The valuation depends on ROE and growth. Let's see what happens. But we're bullish. We're bullish on the bet is on the management here, and we're absolutely confident on Rashesh Shah. Ability to scale, the way he scales, we're very confident.
Okay. Amit, stay on. Lots more to talk about. A couple of pockets out here. You could talk about the diagnostic space or maybe even the AMC space. Now, Amit, there has been some dent of investor confidence when it comes to mutual funds because of the as a space, because of what's happening in the debt space. Do you think this disrupts the long-term trajectory of an HDFC AMC? They also have individual issues for which there are some offenses being taken against the company and the MD. And part 2 of my question would be, would Reliance Nippon Asset Management, which will no longer remain an ADAG group company, catch up on valuations, and therefore is that a better purchase opportunity?
So Neeraj, 2 points. First of all, there's an arbitrage in Reliance Nippon. It's a nice arbitrage of 7-8% in the next. That is basically buying it at the market at 215, selling it at the buyback at 230 in the next 2-3 months to Nippon. It's 100%. Like all your shares will get tendered. So that's an arbitrage. If you're using liquid funds for short term, this is like a better mechanism than liquid funds. Of course, there's some risk. The second question is about HDFC AMC. Our long-term thesis remains unchanged here. So like debt was not the reason why we bought. Basically, we were basically buying HDFC AMC for equity rise, but debt I believe will move towards AIFs. That's the better mechanism for debt. The short-term problems are there, but I don't see this will have a very long-term impact. Like this is not like we've not. Basically had a very strong, we've not relooked HDFC AMC because of the ongoing crisis. Again, a small portion of their revenue comes, about 30% of their revenue is not small, but 30% of their revenue comes from debt. I don't think it will grow very fast, but it will remain where it is. The main part, the pie will come from the equity portion. So that's a very small market. If you see, they have passed on everything to the distributors. Their profit was broadly 34-35 bips on the AUM. It will remain at 34-35 bips on the AUM. So the TER cut, which was the more important issue, has had absolutely no impact on AMC companies like HDFC. Now, between a Reliance and a HDFC AMC, See, HDFC trades at 40p. The only difference is valuation arbitrage. So Nippon is broadly at 28, 29p, and HDFC AMC is at 40p. The ROIC, the new invested capital, is extremely high for HDFC AMC. It's about 600%, whereas for Reliance Nippon is 100%. So both will do fantastic, but we will stick our money to HDFC only. You need a banking network, and Reliance is a little push product, but if you speak to any distributor, he'll tell you that HDFC just sells, and if the clients love it, we like it. And in this crisis, I would say the least affected mutual fund has probably been an ICICI and an HDFC AMC. These are two who've basically managed the crisis extremely well, and we saw in October quarter as well. If you see when peak NBFC crisis happened, the liquid funds of HDFC raised 35,000 crores in that quarter. So people move towards safety as soon as they see that this is a problem. So HDFC will be a beneficiary and not a problem for if other the debt crisis will actually help branded players a lot more, like HDFC, who've had lesser exposure to the problem areas.
Okay, hi Amit, good morning to you. Let's shift focus towards the more riskier and the high beta space, and a space where you've been bullish in the past, and I'm talking about the real estate pack. And now the entire focus is there after the BJP's come back into the power, because there's so much of thrust on infrastructure. You believed in the past that there could be some multi-baggers from this space, and there could be some players who could even disrupt going ahead. We've seen some good returns also coming in the past from players like Oberoi Realty. Godrej has done pretty well. So going ahead at current levels, are there any stocks in this pack where you feel they can emerge as multi-baggers in the next 2 to 3 years?
Hi. So if you see, there are 4 sectors where no one makes money. One is jewelry, because there are too many corporate governance problems. So we were just noting this down: jewelry, real estate, textile manufacturing, and Bollywood and education. These are 4 or 5 sectors where companies go bankrupt. New companies come and new companies go bankrupt. But if you see in jewelry also, you have a titan who does 1600 crores of profit and has a 1 lakh crore plus market cap now. You need to select quality in real estate. According to me, the quality players are Godrej, who can easily scale. Godrej, where the entire market is unorganized, so we might have vested interest. So this is not a recommendation, but Godrej Properties, Oberoi, these are companies that we might have in our various products. So we remain very bullish. See, there is no competition for these guys. You look at how these guys are scaling up. I'm very confident that they will do what Titan did in the jewelry space. See, most categories, the market leader has 50% market share, 60% market share. Like a VIP already has 50% market share in bags. So if the industry grows at 13-14%, they will grow at 16-17%. But real estate, the market leader, if you see Godrej's con call, the market leader itself has 2.5% market share, and they have said that in the next 4 years we will double the market share to somewhere around 5-6%. So real estate is one space where I don't like as a whole, but I like the 2-3 builders which are there. They will keep gaining market share, they will keep growing fast. So those are the kind of companies we like. But we don't like the real estate space, we just like 1-2 players.
Okay. Stay on with us, Amit. Very quickly, Amit, if I could come to you and take your view on Zee, which has been in focus in the recent past. Fundamentally, everything seems to be sound, but there is that overhang of the stake sale.
See, here it's going to trade according to information. So I have no information what's going to happen. Like, if you see an average of analysts, they've all believed that the fair value is somewhere around $500. But I have no views here, so we don't have no positions here. This will trade according to news. The day 2 days before news comes out, I can with a lot of conviction tell you the stock will go up. So yeah,
okay,
no trades here.
Okay. Okay, so Amit, thanks a lot for bringing all those important brokerage notes to keep an eye on for this morning. Amit, small finance banks, would you bet on that vis-a-vis what's happening to the other banking stocks in the PSU space and also for a couple of NBFCs?
Yes, they look good. They look good to me. Like all three of them, to be honest, they're doing well. But see, they're in a very initial stages. All three of them. Large wealth will be created here. Is what it's like betting on a startup. So these price to book at such initial levels don't matter a lot. Price to book matters a lot. All those valuation factors come a lot. They are cheap in price to book levels, but all those valuation factors come up in a very large way when the banks are larger. The opportunity for these guys is large. Ujjivan is 10,000 crores, Equitas is small, AU is also 25,000 crores. So the entire pack loan book is about 40,000 crores. I expect this loan book to grow 35, and NBFCs have left their space, so they will do well. They will do well. We own one of them, a small position. If things get better, you need to increase your position. So that is very important when in these kind of places where you start with a small bet and buy more when things get better. One thing is there in microfinance. I've been investing for a lot even before they got listed here. There will be unknown risk which come in the between. So you need to be careful to take some money out of the table when things get too good as well. So it's a good investment. I would say all three would do super well in the next 3, 4, 5 years.
Well, all the three stocks are seeing some bit of positive take, at least in the pre-opening session. Amit, if I could come back to you, you were saying you track consumer pretty closely. What's the takeaway with regard to what's happening with the auto pack right now? The slowdown is pretty much evident. Do you see any sort of turnaround coming up for these auto companies, at least in the second half? That's what we've been hearing from the interactions we've had with a couple of managements. In light of there could be festival buying or also pre-buying would relate before BS6 kicks in next year.
It's a possibility. See, we were the first ones to tell you that, like in December, we said Maruti sales will fall 20% on your show. We got bearish on auto in October, but now I'm telling you, there are still, if you speak to their, like whatever the management might say, yesterday Rajiv Bajaj said in one of his interviews that June has been a weak month and the slowdown will stay for some time. But it doesn't matter what they say, it matters what they order. So when we speak to the auto ancillary guys, they are yet to start ordering in a large way. So we're going to check again. Probably next time I can tell you if they've started ordering again. But last we checked, there are no large orders coming in. Like the growth in orders is not there among the auto ancillary guys till now. So we look at data. So data doesn't tell us that growth is coming back. The second market expects growth to come back. You'll see these stocks going up 10-20%. But yes, they're good, great. So Amit, these are good companies Amit, in a bad time. You should buy.
Yeah, that's what the point, Amit. So would you accumulate some of these companies, and if so, which ones?
Yeah. Actually, CM has said that the auto will grow at 4% this year. Even if Maruti does well, they grow at 6-7%. But our investing style is little more on the growth side. So we want to buy in companies which grow at 20, 15, 18% plus. That's not going to happen in your auto companies, but that doesn't mean you cannot buy. There are a lot of investors who are looking for it. Doesn't fit our top 10, top 15 criteria, but Maruti is a great bet, I believe, at these levels for people who have little lesser return expectations. It can go down. See, whenever you see a quality stock, Neeraj, typically they bottom out in in 12 to 14 months. The last 2 months is the time when the largest price fall happens. And when will that 2 month come? I don't know. But if that comes, I will buy it. Right now it's a 25 PE stock. It's 5-6% volume growth, 7% volume growth. I'm not interested there. But if it becomes like a 18-19 PE stock with 5-7% volume growth, we don't do this valuation arbitrage, but I might be interested there. But last 2 months, you look at all quality stocks. Whenever they have like when they go through bad times, you see the last 2 months, you will see the largest price correction happening there, sure. And that's the bottom time. So if Maruti goes through that, probably we might be interested.
We've got an interesting query and a right one at that too. Amit Jeswani, we look at companies which are unique a lot of times, the sin companies, and throw in a casino player, Delta Corp, or maybe some of the liquor companies, no longer sin companies really, but let's classify them that way. What are your thoughts here? They form within that wider bucket of consumption. Do you like any of the names and why?
So we don't have any positions in any sin stocks, unfortunately, but we love sin companies as a theme, and No, not a religious reason.
Okay.
It's just that we have like UBL volume growth was 3-4%, right? For the last 5-6 years, the last 1.5 years they've done well, so we missed out on that trade. United Spirit now seems to be that turnaround point is coming, that inflection point for United Spirits is coming this quarter. Probably from this quarter onwards, I'm seeing that they have done fantastic work for the last 3-4 years, United Spirit, and this will become a very large company, I believe, in the next few years. It's just that our capital, Neeraj, this becomes a problem because we have 20-25% growing companies, and it hurts a lot to sell a 20-25% growing company and buy a 10% growing company. So that becomes a problem for us. But these are very super business models. Delta, I love the business models, but there are some things like right now the GST thing. I need to see what's happening. I've not studied. I have studied the business, but what the latest things I've not studied what's happening. We don't have cash on the portfolio, so. Delta, I'm going to have a look, but overall, Sin stocks will create massive wealth for you in the long term. The market cap is very small. Like just lately, there was a Chinese company called, I am forgetting the name, but it just hit a $150 billion market cap a few weeks back, and that's been the best performing Chinese stock in the last 3, 4, 5 years. So you need to see alcohol space is a very nice space. It's just getting started, I believe. But we don't have positions yet, but we will get it when things like we have extra money.
I must say, there's been this whole PE erosion that has happened for all these sin companies. So United Spirits, the growth numbers have been chalk and cheese every year, but the PE multiples for United Spirits have corrected quite significantly, and which is why the stock has been laboring at these 550 odd levels. Similarly for Delta Corp, ever since the GST news and then some other news came about, the stock has been under pressure. The only whiff of good news is that I think yesterday or day before, the Goa Chief Minister, and apparently in a newspaper report, it quoted the Goa Chief Minister as having said that casinos are important for Goa tourism, and therefore that overhang on whether the casinos will be shut down or moved out might just kind of recede from the minds of the investors. So
also let's see if we can expect any sort of clarity with regard to, there were news reports suggesting that they've evaded GST.
Yeah.
With regard to calculation, there's a meeting on June 20th. So I'm sure even with regard to Sin stocks, ITC could be in focus because we've not seen any sort of increase coming in the last 22 months. And this is one stock investors or traders really keep an eye on. So we'll watch out for all these stocks. But in terms of markets right now, Nifty is trading below the mark of 11,900, and Adani Gas is the one on back of news reports. Remember, we just highlighted that stock for you. It's trading with gains of 4 to 4.5%, and just not about today, by the way. The stock has been an outperformer even on Y2D basis, up over 70% in trade. Shubham, if I could come to you on the charts, how does this look with today's gain of 4 to 4.5%? Would you advise taking more positions here?
So Adani Gas, I think the gap up opening that is there today seems quite encouraging, but after the opening we have seen that the stock has started drifting down. So I think the right level to enter would be if we can get 174 during the day, and then one can look to maintain a stop loss at 168 for a target of 185. So it's certainly a buy. The only thing is if we get a slight pullback up to the level of 174, then I think the trade will get more lucrative.
Okay. Well, there's a query, of course, that's coming on the pharma stocks as well, and I'm not surprised because the conversations around what happens to pricing, etc., are very divergent. Brokerages have different views, companies have been saying different things, yet the prices have maybe held up but have not gained too dramatically at all. Amit, Jeswani, do you have any thoughts here? Maybe these are not the companies that are growing 20-25%. But valuations compared to 10-year or long-term averages seem compelling.
Neeraj, my portfolio is 45% financials, 25% consumer, 18% IT. So I am very concentrated in these stocks, and out of my financial space, except one stock, all stocks are at lifetime highs. So you need price action as well. In pharma, we have a punt in one of our non-core portfolio, and that is on the API space. We own two companies. One is Divi's, which didn't report good numbers this quarter, but broadly I like the theme that this is the first time that they are doing capex. They're doing a 2,000 crore capex after a long time, and typically they do 2x asset turnover. So in the next 3-4 years, I expect the turnover to double of DV Slabs. The second company we own is a small, this is small company called Solara, but we can sell it anytime. So we got it very cheap. This is an API trade. This is again like a pollution trade, and this is not your typical US generic pharma kind of trade. Pharma we don't own. These are just our punts, which I said, the 2 punts that we own in our portfolio, but these are not long-term investments for me.
Okay, the 2 API players, Divi's and Solara. Solara is the one that got separated from Quint and currently at 476. I think it is trading in or around new highs for itself. Amit, Jeswani, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you so much, Neeraj. Thank you so much.